The global energy transition has intensified the demand for critical minerals, driving immense capital requirements in the mining sector.
Central Asia, with its vast natural resources, strategic geographic position, and evolving economic landscape, presents a compelling yet complex investment frontier.
When risk is well managed and returns are attractive, Central Asia's mining value chain, ranging from greenfield exploration to brownfield expansions, downstream processing and infrastructure build-out, can deliver highly profitable and strategically significant outcomes.
This session will explore innovative financing approaches, partnerships, and structures that can unlock the region's potential and support the development of resilient, future-ready mining and infrastructure projects.
Hello, everyone. Welcome to our session on mining, project finance, and investments. I'm Sara Barin. I'm a partner with the Energy and Natural Resources team of Simmons and Simmons in London. I'll hand over to our panelists to introduce themselves shortly, but we have a very well-rounded panel today, and within this panel we will discuss how project finance is evolving in the mining sector, the increasing interest from DFIs, the role of commercial banks and private credit. We will touch on some challenges and regional perspectives, and as always, finish with an outlook and commentary on the opportunities going ahead. Why don't I first turn to our panelists to briefly introduce themselves and their institutions. Stephan? Yeah.
Hello, everyone. Yeah. So my name is Stephan Pueschel, and I'm heading the metals and mining team at KfW IPEX-Bank. KfW IPEX-Bank is ultimately owned by the federal government of Germany. And as such, our bank has a mandate to provide financing in the interest of European economy, based on commercial financing. Yeah, that's an important point. So what do we do? So we provide senior loans globally, in mining across the periodic system. Mining includes also processing, especially in battery minerals. This has become much more complex nowadays. And in addition, it's also metals and metal recycling. And where do we normally come in? We support junior miners as well as also global miners. So it's really across the whole range. And we provide commercial loans, but also long-term loans based on ECA cover, based on exports coming from Europe or offtakes going into Europe.
Thank you. Hi, everyone. Lee Barnes, I'm a director with OL Advisory. We're a team of ex-bankers across the capital spectrum, so focusing specifically on mining and metals, covering strategic advisory, markets and offtake, and debt funding. We've all got over 25 years experience in mining, and particular focus for this project, to give you a flavour of the kind of clients we have, is ferroalloy resources in Kazakhstan with a vanadium project, and also Azagold, the state mining company of Azerbaijan. Thank you.
Hi, everyone. My name is Azamat Kasymbekov. I am a principal bank at Natural Resources team at the European Bank for Reconstruction and Development. We've been involved in the mining sector for quite some time, and having invested around 3 billion across more than 70 projects, 15 metals and minerals. So we have our support to the mining sector has three main components. First of all, it's a full range of financing from project finance to equity, including junior mining companies. The second one is technical assistance to support capacity building, trainings, gender inclusion, and others. And the third one, we work with the government to improve regulation, business environment, to promote investments in the sector. Thank you.
Hello, everyone. My name is Ekaterina Autet. I'm a senior investment officer in the metals and mining team in the International Finance Corporation. So the IFC is a private sector arm of the World Bank, and we've been in the metals and mining space since our inception. And I believe the only DFI to be consistently present across the in the sector. Over the last 10 years, we've invested and mobilized over 8 billion in the sector. So it remains a very committed and vibrant engagement. And we work across all products, so from equity to MES to debt to capital markets.
Morning, everyone. Coley Barker from Excelsior Capital. So Excelsior is a partnership with Wogan Resources. Wogan are one of the largest and most established commodity traders in specialty metals. So anything that's strategic, off-market is usually their bread and butter. Antimony, graphite, lithium, rare earths, those are the markets that they dominate. And Excelsior Capital is the investment partnership of that. And we predominantly look at private credit, quasi-equity, any kind of financing structure with a view to getting that underlying product. Thank you.
Thank you very much, everyone. I do want to start the discussion with the DFIs, both because I'm a bit impartial coming from development financing background myself, but also due to the vital role of DFIs in being anchor and initial funders in project financing. So it feels like an appropriate place to start. Ekaterina, let's start with IFC first. You did mention the long-standing interest of IFC. What value do DFIs and institutions like IFC bring to project financing in the mining space?
Yeah, thank you for this question. So, where do I start? It's a space that's been very exciting, and that's has attracted a lot of interest globally, I think, recently. So there are now many more partners and governments looking into metals and mining, and I think realizing finally how strategic it is and how crucial to the industrial development, to the economies. And as a DFI, IFC can support where commercial lenders sometimes cannot, whether it's for political risk reasons, for country reasons, whether because it's just such a very long tenor. So we look at metals and mining and how to make sure that the financing goes where it's mostly needed. We look also at how to make metals and mining projects sustainable, how to make sure they are supported by the communities, they're supported by local governments. So it's a whole range of interventions that can come at a very early stage through equity, or at a later stage through, for instance, project finance debt, which is something we do quite a lot. And in this convenient role, what we can do is de-risk basically the financing for commercial lenders and for other participants.
Thank you very much. And Azamat, what can you add from EBRD's perspective?
From today, I just want to talk about the JUMP program. It's a dedicated equity platform up to 150 million euros to invest in early stage mining projects, predominantly in the critical mineral space. So we launched this program last year, and we have built a strong pipeline. Why are we doing that? Because we see that there is a funding gap in this subsector, especially in our kind of operation. And we opened this to focus on projects to bring them from the from the defined mineral resource stage to the up to construction stage, when the DFIs and other commercial banks can support it, the construction stage. So we expect that there will be 5-10 projects across the 5-year investment period, and this is anything, any metals, any commodities except for thermal coal, privately owned. What's important for us? The project should be located in our country's operation. That can be Central Asia, Kazakhstan, Mongolia, and commitment to the ESG practices and standards from the outset. So we bring not only capital, but also technical and ESG expertise to move this project further down, to progress them. So we received, since the last year, we received a lot of responses, but from our side, we see that there are mostly prospects rather than they don't have defined resources and international standards like JORC and even sometimes even under local standards. So we what we can say that engage early, just to structure the project in accordance with the international standards.
Thank you, Azamat. And indeed, as lawyers and other participants in the project financing stage, we are aware that the early stages of the project are the most risk-heavy periods. So in that regard, the involvement of EBRD through this junior miner program and IFC and the like are quite valuable. I want to turn to Stephan, and you sit within KfW in the commercial arm, but obviously it is set by KfW as a development bank. So I feel you would be in a good position to comment on those different perspectives from commercial banks and DFIs.
Yeah, happy to do that. Yeah, first of all, what's mentioned, what's the difference between a commercial lender and DFI? I mean, based on the background of a DFIs, it's about impact. Yeah. So, and as such, they are also in a position to have a higher risk tolerance on that side. So that's different from commercial lenders. For commercial lenders, it's pretty simple. It's risk return on that end. So if you come in as a commercial lender, then you can act complementary to our colleagues from the DFIs, and you can also create a kind of market test on that side. And this market test can help also other commercial lenders to enter into the financing. Why is it especially important in mining? The specialty about mining is that loans and lenders are scarce in mining. That's totally different than, for example, for renewables and infrastructure. We have many banks who are interested to that sector. Mining, it's different. There are several reasons to that. I give you 3 major examples why that's the case. One is you need a lot of patience in mining. From all the different exploration projects you have, very few will really be materialized and become concrete enough. Yeah. And even if this exploration project becomes concrete enough, it will on average still take 10, 15 years until you got a producing mine. That's one point. Another point is ESG. By definition, mining has an impact on ESG. So you have to really understand what kind of risk you're facing and how you can mitigate these risks. And thirdly, mining, as I said, in the overall financing is a niche. And still you need a lot of expertise to really cater for that niche. You need expertise on the financing side, but also you need geologists, you need technical expertise on that end. Yeah, so you need ESG expertise. So it's quite a range of skill set you have to really have available, yeah, for this niche. So having said that, still mining takes place. It's very important. We know all the reasons. So and what can we do as a commercial lender on that side who are active in that field? On the one hand, we have the expertise. We can arrange also these financings, yeah, so to bring in other lenders, yeah, and also take certain roles in the financing, like ECA agent, technical agent, ESG agent, modeling, yeah, all important parts, yeah, which assemble the whole financing. And of course, in our role, we would also be a kind of anchor investor, provide financing naturally, yeah, and especially in junior mining, for junior miners, this can be long-term financing based, as I mentioned before, especially on ECA cover, exports or offtakes.
Thank you very much. I do want to stay in the commercial banks and private credit space. Kaylee, turning to you, what are you seeing from that perspective? Are you as patient as Stephan suggested that we all should be?
No. I mean, I suppose that's predominantly the difference between commercial lending and the private space is we look for with sort of higher risk, higher return, I suppose, and that's what people come to us. The private credit space, and this also applies to private equity. I guess if you go to any institution like ourselves, we'll have a different criteria and a different mandate, and they'll all vary. We're a smaller outfit, so we tend to work towards the customer, the client, and provide a solution. So it can be quite flexible on the structure that we provide. We will also work with commercial lenders like Stephan, who has a much bigger balance sheet to put to work on funding larger projects and so forth. But what we're really looking for from our side is actually the product, so the trading, and that we can provide expertise in that area, because when you're looking at critical metals, I mean, I'm a geologist by trade many decades ago, but understanding that you've got a mine, understanding what the commodity is, but understanding actually how it gets processed, what's the quality of that product, how it will be used all the way down the supply chain is far more intellectually demanding, and that's really the sort of expertise that we can bring to a table into the financing. So when we're looking at these sort of investments, you know, we could be working with any one of my peers here. In any way, we will be providing, you know, our pool of capital, which will be higher risk and higher return. It might be later stage than the exploration because we can't do that. But we'll be looking to provide the expertise on the product. And I suppose more directly to answer the question, what we're seeing opportunistically is plenty of things coming our way. It's a very interesting time in the industry, particularly in the critical metals space. We're getting lots of governments that want, and government bodies and all kinds of people up and down the chain, like you see here today, that want our expertise, but also want exposure to the markets, want exposure to different parts of the supply chain. And while it can be confusing and challenging to address all that, the opportunity set is the best I've seen it in 30 years in the industry.
Very positive note. Thank you, Kaylee. Lee, turning to you. You have interfaced with all these different types of institutions in your role. What are you seeing as some of the investment strategies that are emerging in focus areas?
Yeah, thanks, Sarah. Yeah, as an advisor, we're quite agnostic to the funding solution projects. And I think, as Kaylee probably touched on there, compared to 10, 15 years ago, the options out there for funding have greatly increased and can be a little confusing, probably driven partly by what commodity you're in, what jurisdiction, and more importantly, now we're moving into the more critical metals, what the end use is and where the end user is. So we're seeing quite a range. We're not just commercial banks, DFIs, public equity. We're now seeing strategic investors coming in. We've still got the commercial banks, they're still active. It's still playing a role. We're now seeing quite a lot of specialist credit funds, as you say. That usually comes with other add-ons. They have to make high returns and are particularly focused on specific commodities. And we're seeing quite a few in, excuse me, specifically in the transition metal space. We've still got equipment financing, which can still be a very important add-on. You know, and can assist through ECAs from specific countries. So we're really seeing a full range, but I think the key is, you know, for each project and each company, that how you fill that funding gap or the full funding solution, you know, can be very different. And you've got to really look at all the different components of that funding before you can make an informed decision.
Thank you. Stephan, are you experiencing those alternative funding options coming across them and offering them maybe to the
First of all, yes. Yeah, nowadays the range of products which is offering is also linked to the interest in mining. It has increased on that side. Yeah, so it's really now like a puzzle where you have to really see how can you complement your financing. Taking the picture of a puzzle, you got the equity puzzle, yeah, and you have a lot of players there. Yeah, in principle, looking at it, you have the stock exchange, yeah, where you can raise equity. You've got private equity, you got government wealth funds on that side. Yeah, in addition, also worth mentioning, you got streamers, yeah, who look at it, royalty financing. So it's really quite a wide range. And of course, also to enhance your IRR, you got the lending side with the different players mentioned, commercial banks, DFIs, private credit. That's right. So this has to be assembled. And we see more interest. It really differs in which region you are, which kind of metal you're looking at. So there is not a one size fits all. It's really very specific where you are. Is it more base metal? Is it a battery metal? But depending where you are, there are quite some options on that side. That's what we said in the short pipe.
Thank you. Let's turn to some of the challenges without being too pessimistic. What are some of the hurdles that we are seeing in this space? What are the bankability concerns that are emerging? Azamat, why don't we turn to you first?
Yeah. So I would say that the most, if you kind of listed, three ones will be ESG, the first one. So second one is, especially in our region, is infrastructure deficiencies. So now most of the mines are located in very remote area with a lack of power, road infrastructure, which requires additional capital to build the mine. And another one is, I would say, regulatory instability, the constant changes of the requirement, etc. And how we do that? Well, first of all, we work with the government to improve regulation, so to have a stable mining code. And one of the recent examples in Uzbekistan, we assisted the government to draft a new law, which now effective from February this year. And now we are working with the government to help to implement all the changes that are in that law, so including capacity training, etc. On the infrastructure, we've been in the previous session dedicated to the renewable power. My colleague, she's involved in a number of renewable projects, so we are building more infrastructure just to improve road connectivity, etc. On the ESG, said we require that all the projects they are implemented in accordance with the best environmental and social standards. And maybe just as an example, in Turkey, we provide the loan in total 2 loans up to 90 million to Tumat. It's a mining subsidiary of Nurol Holding, and to build 2 gold mines in the western Turkey. And the Tumat, they previously had no experience in the mining sector. Say from the start, they mobilized the team. They engaged with the mining contractor to build the mine on time and on a budget. And they engaged with they started construction or building this mine during the time when there was public sensitivity, public opposition against mine in that area. And the company managed to engage actively with the local communities, with NGOs, to build the trust. And they were open. They invited NGOs actually opposing the mine to the mine to do the tours and just showing what they're doing. And on the technical side, they were trying to apply the best available technologies like dry stack for tailings management, and they've been actually working with the local communities, supporting them. They opened vocational training schools. They were supporting local communities to revive, to restart strawberry production, etc., etc. So they were very active in engaging with all the affected stakeholders, and that's why they helped them to build the trust.
Indeed, and we have been seeing that element of getting the social license to operate in a country and operate a mine is quite important, and there is a right way to approach it. Thank you. Ekaterina, does that overlap with what you're seeing on the IFC front?
Yes, absolutely. I would second everything that Azamat has said. ESG is very important. Community buy-in is extremely important, and infrastructure is, of course, always a challenge. What I think I would add is that the challenges are also opportunities, and mining companies, when they really think about it, can do things in a way that makes such a huge difference to people's lives, to the outcomes locally, to the buy-in from the local stakeholders, and that comes through jobs, that comes through related infrastructure, because where you have a mine, you need roads, you need transmission infrastructure, renewable solutions, and ultimately it's to everyone's benefit. It's not just the mine. If there's a new road being built, then everyone can benefit from it. So the IFC works a lot in that space as well. So supporting infrastructure development for mining, whether that's water to mines, power to mines, infra in general to mines. And we also work a lot with supporting mining companies in maximizing their beneficial community impacts. So we have a whole team that's dedicated to sustainable infrastructure advisory and support, and that usually comes with our financing mandate. So there's a whole range of solutions. Obviously, it's a very difficult space, but I think we now have a number of precedents that show that mining can have a very positive impact.
Thank you. Kaylee, I want to turn to you to comment on some of the regional dynamics that you're seeing with the way the supply chains are evolving in the mining sector. We are seeing a trend, obviously, towards pulling those supply chains more towards the West. What are you seeing in terms of these regional dynamics?
Yeah, I mean, it's been a ever-evolving dynamic in the mining sector. We've gone from a very, the ESG green rhetoric to energy transition, and now, since a certain individual has got into power in the US, more on the strategic defense side. I don't, nobody likes war, whether it's geopolitical or trade, but one thing that can be said for certain is it's quite often very good for commodities, and that's what we're seeing. So commodity prices are very high. That's good. Bad is that it's meant that supply chains in a lot of these commodities has been broken, and that's mainly because of China. And China's been such a dominant place in the industry, whether it's downstream or processing, or even in some cases on the supply side. We did a deal earlier this year on the Hillgrove mine in Australia, which was for the antimony stream, or anti-money if you're from the US side. Antimony, is mainly used in refractory components, so like flame retardants, but it's actually used also in defense. It's a very small part of it, but it's used in defense. It's a tiny market, but outside of China, there's nowhere to really process it. There's very few processing places. So that supply chain is broken. We've tied up the supply side on the stream. We're now working with a range of bodies, both in the US, Middle East, and across the world to shore up that whole supply chain, as Wogan, our partners, are the dominant traders in that metal. And we don't just see it in antimony, and that's the reason, antimony went from $7 a ton to 60 in a very short time. We're seeing the same playbook happening in tungsten as well. So these supply chains are becoming increasingly important. We're trying to close the gap and join the dots and work up and down that supply chain to close them and make sure that we all can get supplied, whether it involves China or without China. And in the meantime, we'll continue to see this volatility, I think, in metals. But that's the sort of opportunities. And where the resources are, whether it's on the supply side or where the technology is and the processing is, whether it's further downstream, I think Central Asia in particular has a role to play in that.
Thank you. I do want to stay on the topic of outlook and what we should expect looking ahead. And that's also an advantage of being in conferences like this, which happen yearly, because we can compare our notes next year. So looking ahead, what are some of the regions and trends that you would expect to emerge? In this regard, Ekaterina, I do want to mention there was an important announcement by IFC on their partnership with Appian, for example, for supporting emerging markets. How did that come about, and is this a trend that we should be looking out for?
Yes, absolutely. It's quite an exciting new venture for us. So IFC has invested in what we call a sidecar to the Appian Mining Fund. So it's up to 1 billion. We've invested. We're an anchor investor in that. This instrument is targeting, let's say, medium-sized mining projects in emerging markets, which typically have had the lack of liquidity. So it's quite innovative in a sense that the DFIs until now have usually invested direct equity, but we're scaling up and working with the mining fund, with which we've already worked in the past, is one of the ways to do so.
Thank you. Lee, I feel like it's always good to let the discussion go and then turn to you for a wrapper on how you see the challenges and trends looking ahead.
Yeah, thanks. I think for the region, Eurasia and Central Asia, it's quite an exciting time, really. We're seeing all the geopolitical uncertainty, but as a region, it's very well endowed with resources, very well placed, both geographically and geopolitically. There's a lot of opportunity ahead. We're seeing I think we touched on in the previous session that there has been a lot of exploration in the region, but a lot of it dates back a long way. We're seeing majors now coming into Kazakhstan. We've seen Endeavour Mining now come in with eStar. So I think we're really seeing that push at the lower end. And then, I think it is a challenge for the bigger companies. They're now aligning the ESG, the policies, the corporate governance more to a more Western way of thinking, and potentially looking at listings on the London Stock Exchange. And we've heard stories about the Uzbek companies coming over, and these are large companies that have generally gone under the radar historically. So, and just to finish on, I think critical minerals, a lot of those haven't been historically explored that well, and now coming to the fore. And I think it'll be very interesting to see how that relationship with China and the West continues over the next year. But certainly a lot of opportunity there.
Thank you. We do have a few minutes before we turn to questions on any closing remarks from the panelists. Any notes on what you've heard either in the previous sessions or in this session? Welcome any comments, and otherwise we'll turn to questions from the crowd as well. Okay. Why don't we turn to questions? Have your hand.
Hello, Simon Clancy from Strategic Solutions. Two questions. One for Lee. Ferroalloy Resources has decided to use Chinese financing and not to use Western financing for its vanadium project, citing savings of up to 40% in developing that project. Does that send a signal as to where project financing is going to go? And secondly, a question for the KfW representative. We know the KfW has given a loan to Armalik Mining Combinat of 2.6 billion euros. What's not clear is how much of that's been deployed and what's been the effect of that financing, because there are suggestions that the transformation process in Armalik, in terms of its copper infrastructure, is actually behind schedule. Thank you.
Thank you. Yeah, you're referring to the ferroalloy resources, really. They're not fixed on Chinese financing, but the using a Chinese EPC contractor will generally bring along financing, but that's not a predetermined yet. I think what it does point to is that China as a whole, trying to secure the end product and also having large EPC contractors, is coming with some very attractive packages of EPC at a reduced rate compared to Western contractors, along with financing for that EPC construction in return for some of the offtake. I think the big challenge that not only Ferroalloy Resources we all face is that it's got to be a complete package at the moment. It's very hard to combine that with other forms of financing. So I think that's something that's interesting that we'll see moving forward, whether that can be combined with other forms of financing. But I think, yeah, there is a lot of interest, from China to secure that end product.
Yeah, when it comes to Almalik, that's true. We are mandated for 2 billion financing. This is public. Alas, I cannot comment much more because we are bound by NDA. Sorry for that.
Hi, Sunny from CIU. So the question really goes to the whole panel. At the end of the day, the projects that you are lending to or different financial structures, something has to be sold. The end product has to be sold onto the market. And there are cost risks, country risks, various amount of risk associated with it. What are the key parameters that you guys need to understand to lend those kind of financial money to those players? If you have to pin down, say, 2 or 3 key points that you need to understand about the cost risks involved in the final product selling, what would those be?
Is that a question for IF?
It's for the whole panel. I think everybody's on the financial lending side of things. So
we did handle some of these points, but again, the question goes to the key points that you look out for in your project.
Providing financing. Well, I can start answering that. And I think obviously you have the usual questions as to the market for the commodity and the credit economics. What we also look at as IFC is the sponsors, and because it's easier to work with like-minded sponsors who understand what the DFI can bring and what sort of support we can provide. And then as a DFI, we're looking at development impacts of the project. So for us, that means jobs first and foremost, but also other potential benefits.
And just to add that we have the same requirements, so the same points. Maybe just from the equity perspective, we also look at the upside. So what's the potential, let's say, to expand resources? If there are any more metal, more gold, more copper in this project. So and what's the exit? What's the strategy of the company? And so that's why I would say the management team would be also important. So who is building the mine, or who is pushing this project forward? And that will be important for us as well.
Yeah, and adding on that, of course, what the colleagues said, it also holds true for us. In addition, of course, it's in which country you're operating, what are the country risks? Yeah, what is the ore body you're dealing with? Yeah, because this relates also to the kind of construction techniques you have, processing techniques, so you have all the technical risk which is linked to that. Yeah, you then in which jurisdiction you are, so what kind of legal risk you have, mining code. I mean, we have lawyers here, so they have also important role on that end. When it comes to that, of course, the financial risk, yeah, how stable are the cash flows? Is there also sufficient return for the sponsor? That is also important in terms of incentives. So I think that's to give you some ideas what would be typical points we're looking at.
Just think one to add from our side, which is more from the metals trading side, which is where we start, is that if the product can't trade, then it's a non-starter. So we tend to look at that first. What's the quality of the product, and then cover everything else that my colleagues mentioned.
Thank you.
Thank you very much. That's probably all we have time for today. I'd like to thank the panelists once again for their insights and the participants for their questions as well. I did quite enjoy interacting with this panel in our preparation sessions, because to me it shows it's a clear demonstration of how these institutions and various players in the market supplement each other and will be key in defining the project financing requirements and bankability issues in mining projects going forward. So thank you very much. And I believe we have a keynote of the Kyrgyzstan. Thank you.